I think we just have to start today on audit evidence. Audit evidence, but we're talking about performance. Performance audit. Audit evidence. We have types of audit evidence, and the first one is the physical evidence. Physical evidence. Types of audit evidence, physical evidence. What do you think is the physical evidence in audit? What do you think is physical evidence in audit? So we say the physical evidence is actually seen by the auditors, and this involves the examination of, let's say, physical assets, witnessing the internal controls, and bookkeeping procedures which are being carried out by the office. So this type of evidence is generally effective for supporting the existence assertions. What do we mean? We're saying these are physical things that we can touch, that we can feel, that we can see with our own eyes. For example, as they are giving us, they're saying assets. You really, they tell you that you have got a car that is not here. Then you go physical and see it. Or else we built a house in connection of one of our assets in the organization, and it's not within the campus, then you really say that we should go and see it. Again, they're also giving an example of internal controls. Okay, they're telling us that a cashier should deposit his revenue within 3 days. You really go in the cash office and see. You corrected these 3 days. Did you deposit according to the deposit slip? So you really see and feel the physical evidence. So this is what we are talking about when we're talking about the first type of audit evidence being the physical evidence. The second part of evidence is the third-party representation. Third-party representation. What do you think is a third-party representation? What do you think is a third-party representation?
I think it's more like using something to act as a witness of the
Okay, somebody that is not part of the organization, but you want really to prove that you really, let's say, supplied the material. So the third-party representation, these are testimonies from independent or third-party persons. They include debtors, confirmations, lawyers, letters, and reports from the sex specialists. So you can, for example, have a confirmation from a debtor. Yes, I really owe them money because they had given me this and I've not given them. So these are the third representation. They are not part of the organization, but there are other people that either you delivered or they delivered their services or goods to you, or you delivered services to them or goods, and yet they have not given you. So these are some of the things, or they have given you, but they just want to prove that the items which were delivered were the actual terms or items that were really wanted by the organization. Then the third part or type of audit evidence is documentary evidence. These are findings from documentation of items which are recorded in the accounts. This demonstrates that a transaction occurred, confirmation that items recorded in the supporting documentation are recorded in the accounting records support completeness. You can have a documentation, yes, that this is what happened, but then you should really have a completeness of it. Confirm that that item was recorded and indeed there is a supporting documentation. There are so many things that we can talk about documentation evidence or documental evidence. You can, let's say, for example, you're an organization and then you have bought items for your, let's say, production or for anything that you are doing, then you confirm to say yes. Did they record in their books that these items were exactly the same? And if you physically count them, they match or they tally. So this is what we mean when we are talking about documentary evidence. And there are three basic types of documentary evidence that we should again talk about. This is the third type of audit evidence, but it also has got three types of documentary evidence. There are those documents created by outside parties and transmitted directly to auditor, like bank statements. Those created by outside parties and held by the client, like a share, order certificates, title deeds, loan certificates, leases, contracts, franchises, as well as invoices. There are so many anyway, but these are just some evidence that they are not within the organization, but they are outside, from outside parties. So these are the examples of the first type of documentary evidence that you can have from outside parties.
Well, madam,
Yes, please.
what am I doing with this type of documentary?
Documentary evidence, the first type is the document created from outside parties. And these are the examples. Okay, so that's the first type. Documents outside, from outside, created by outside parties. Then the evidence are, as I gave you to say, they are title deeds, share certificates, loan certificates, leases, contracts, franchises, invoices. There are so many, but these are just some of them that they are not from the inside of the organization, but it's a type of a documentary evidence that an auditor uses when he is or she is auditing. Another type is let's say computations or recomputations of evidence, audit evidence. This is a result obtained from checking of arithmetic accuracy of a client's records. Computations are performed independently by auditor, and they are used to verify mathematical accuracy of the client's analysis of records. What are we saying? We are saying that you again recalculate their mathematical calculations. As an auditor, you're supposed to do it yourself, not that they should be doing it for you. For example, let's just have an example of 73, 61, 32. Okay, these are just additions. This is a 6, they write a 6, maybe. This is a 11 and plus 3, 14. They will write, instead of 14, they will write that. So you as an auditor, you are supposed to prove, to say, is this right? You calculate, you find a different figure, that it is 146. So this is what an auditor has to do, has to prove the accuracy, what they have added. This is very important, and this is what they do. For example, if you subtract that from that, how much is it? 146, 0. There it is what, 7, is it? Then 1 from 3, 2. It means if it's money, 270,000 has gone. You take it for granted, this is the addition. But normally, you are supposed to prove that the accuracy, mathematical accuracy, is fine. Then you have another one, which is client representation. Client representation. These are oral and written client representations. These are responses to questions and inquiries to clients during the audit exercise that you want as the evidence. So written representations, these are like letters. You can again use them as an evidence to you as the third party of evidence when you are auditing. So these are the three types of documentary evidence that an auditor has to know, that they are very important for us when we are doing audit. So they are telling us that the accounts records, clients, accounting records, for example, ledgers and journals may provide worthwhile evidence in themselves. This can also include checking the internal control system of the client. So we are still talking of evidence, but these are also some of the things that you as an auditor has to look into, mainly the accounting records. Inspection of assets again, you have to find out the results on them. Inspection of assets that are recorded in the accounting records confirm the existence and also gives evidence about valuation. When an asset is recorded in the accounts, it gives evidence of completeness. They will tell you that we have, let's say, computers. How many are there? Are they recorded? Depreciation, is it happening, or are they doing that? So all those are supposed to be checked by you as evidence in your audit checking. Again, things like reconciliations. Checking the reconciliations of clients' control accounts can provide evidence of completeness. So we are talking about reconciliation, that are they doing their reconciliation? If they are reconciling, you check and then you prove that yes, they reconciled nicely and they are the correct evidence for you. So qualities of audit evidence. Qualities of audit evidence. Auditors are required to obtain sufficient, appropriate, or valid or reliable audit evidence to be able to draw reasonable conclusions on which the base on the audit opinion. So they are saying qualities: one, sufficiency or persuasiveness of audit evidence. Sufficiency or persuasiveness of audit. Sufficiency of audit evidence is the measure of the quantity of the audit evidence. There are a number of factors affecting audit evidence judgment about sufficiency. If we are talking about sufficiency audit evidence, the following are some of the factors that we should be based on when we are looking into sufficiency of audit evidence. We have the auditor's knowledge of the business. Auditor's knowledge of the business. How do you know the organization or the organization that you're going to audit? That's why, in the first instance, we tell you to say you should go and take their documents of the organization, read what are their requirements or what is it all about. For example, you can take an organization, read what is it doing, what functions is it performing. And not only that, you should also have so many things that you should know about. What are their regulations? What standard are they following? What are the internal controls? That's why they're saying one of the sufficiency of audit evidence is that you should have knowledge of the business. If the auditor knows the client and the industry of the client, she can collect enough evidence. Because you should know what they are doing. You should know what are their regulations they follow, what regulations they follow, as well as the internal controls and these others. So, sufficiency or persuasiveness of an audit evidence is that knowledge by yourself as an auditor. Again, the other thing is you should know the degree of audit risk. Audit risk is the risk that auditors may give an inappropriate opinion on the financial statements. In order to reduce the risk, the auditor should collect a lot of audit evidence. For example, assessment of audit risk is done by considering nature and the materiality of items in the accounts. And again, these can include the inventory, material, as well as the other things that you can see in the assessment. So, what are they talking about? They're talking about the risk. The risk that can be to your part or else to the organization's part. If you don't consider the risk, you can give an inappropriate opinion for their financial statement. So you should also know that what are the audit risks in connection of my job as well as in connection of the documentation that I'm going to share. If we talk of audit risk, there are so many things that we can think about in connection of this. Sometimes in the organization, you can have, let's say, relations to big people. And then you check them according to our professionalism, you give in a report, later on you hear that he has been either transferred or the job, why? Because of some of these things. So you are supposed to scrutinize the company as well as how to do or how to tackle that particular case in connection of the avoidance of audit risk. The other one can be the nature of the accounting and internal control system. There can be weak accounting and internal control system. This will influence auditors to obtain large amount of evidence. So you can tell them to say the system is not fine. For example, you unlimited depositing of revenue. Not even saying to say you should deposit within this. Anybody comes into accounts office and controllable. Those are some of the lists that can be there. For example, our office, that is an accounting office, the front office, but it is not taken as an accounting office. Imagine our computer was stolen. So those are some of the things that management has to look into it, and then make the controls stiff or strong. So liability or validity of audit evidence. Audit evidence. Audit evidence, you are talking about audit evidence qualities are the ones that we're talking about. Sufficiency. That's what you're saying? We're saying qualities of audit evidence. You have to have sufficiency. Sufficiency, the knowledge that you get from the what? from the institution. That is the one that is going to give you the quality of the audit evidence that you are going to do. Then we talked about other things like audit risk. We're talking of qualities of audit evidence, okay? Audit risk. You should assess what risks are there for you to have a very good quality of audit evidence. And we were talking about the looking into the internal controls of the organization. If they are weak in accounting and internal controls, this will influence you as an auditor to obtain large evidence. That's where we are. So we are saying the quality of audit evidence, the liability and validity of audit evidence, even the appropriateness of the audit evidence. We are still talking of the quality of the audit evidence. So when we're talking about liability, we're talking about the measurement which is based on some factors which are also known as generalization of audit evidence. Measurement based on factors which are known as the generation of audit evidence. We are still talking about the quality that you as an auditor has to have when we're talking of the auditing evidence. Liability is the measure, can be measured or based on the factors which are for the generations of the audit evidence. You have formed them yourself. For example, if we are talking about, let's say, you have calculated the calculations and then you have found out that there was a difference of that. It means this is the real figure, but you have found that that is the difference of that. So it means you are giving them the liability of what you have done yourself, what you have generated, that this is what I've done, I've found out myself. So this is another evidence that is going to show the ability of one auditor with the evidence. That's what we do. So these are some of the things that us as auditors have to know when we're doing our audits. Maybe let's just expand a bit on documentary evidence, as we talked about that there are 3 types of audit evidence, one of them being documentary evidence. We just have to expand it, that you should understand it very well. The documentary evidence is more reliable than oral evidence. Evidence from outside the enterprise is more reliable than that secured from the within organization. For example, if we say, they will tell you that we were supplied with 10 computers, and when you go to the source, they will tell you, I will supply 5 only. So these are some of the evidence that you as an auditor is going to have to say, where is the other 5? Or where the other money for the 5 computers that you say? So we are saying evidence originated by the auditor himself is more liable than the one obtained from others. As we have already given the example to say, you have recalculated and you have found that the figures were not the same, then that's why they are saying your audit or your audit evidence is very reliable, or more reliable than any other evidence that you can give, that it can be given to you. Availability of many sources to obtain the same evidence, the accumulation effect of several evidential sources is greater than that from a single source. Yes. Ask so many people in connection with the same thing so that you should get the right information about them. Because others can say, if you ask only one, he's going to say maybe against that because they hate each other. So that is not going to give a complete evidence for you. So you are supposed to be very, very careful in your audits. Original documents are more reliable than photocopies or any other copies. Because you as an auditor, you are supposed to first say, where are the original copies? If they are not, then they should be certified to say these are not the original documents because of such reasons we didn't obtain, or what happened, then we did the photocopies. Otherwise, you as an auditor, you are supposed to, based on the original documentation than the photocopies. Strong internal controls increases liability of evidence created within the client organization. Yes, if they have strong internal controls, that is going to support you, and that is going to be very good to your side, because you are going to give in a good documentary evidence because they are strong internal controls. So we have so many things. Directly obtained evidence is more liable than evidence obtained from intermediary. So we have so many examples in connection of documentary evidence. Any questions? So there are so many things that we are supposed to know about that, but go and read because the evidence is very important, and that is what we should show when we are auditors. And not only that, we are supposed to give a complete or an opinion that is real, not just the information that is not going to assist you in any way. So we should go to another small topic that is also going to let us know something. We talked about the importance and purpose of documentation, is it? We did. We did last time. And then we should now go to work papers. Work papers. What are work papers? Audit evidence gone. We have to go to work papers now. Or working papers. Working papers. What are working papers? What are work papers? You don't know? You have not ever heard about work papers? Working papers? Oh, just the name itself.
Papers required for specific task.
Come again?
Papers required for a specific task to be done.
Okay. Work papers. Work papers. If we are talking about shortly, we're talking about evidence, okay? This evidence can mean evidence before you audit or evidence after you have done the audit and given an opinion. So when we're talking about work papers, we're talking about the documentation after you have what? Audited. The papers that you keep for other people to come and see what you did. Those are work papers. So factors affecting form and content of working papers. The form and content of working papers are affected by matters such as the size and completeness of the entity. So work papers based on the bigness of the entity. Size of organization. The second one is that the nature of the audit procedures to be performed. What nature, what audit did you do? Which type of audit did you use or procedures did you do when auditing? So procedures. The other one is the identification of risks identified. Then the other one is the significance of audit evidence obtained. Audit evidence obtained. The other one is the nature and extent of exemptions identified. Exemptions identified. Then the last one is the need to document a conclusion or the basis for conclusion. So now we are in conclusion. Again, the methodology and the tools that you have used. Methodology and tools that you have used in connection of reaching to your conclusion. So the auditor has to know the methodology and the tools used. For example, the working papers. The working papers are also tools, are also part of your tool. How? Because if you are going for an audit, it means other people had already done the audit. If it's an old organization, that the working papers that other people did are the ones that are going to support your next audit. So this is what we are talking about when we are talking about tools when you are auditing. So work papers are very important, and are the ones that are put in the files where everybody comes and looks into. And not only that, you are supposed to know that maybe, as I've just explained, what are the main things for the working papers? What importance are they, or do they carry? Importance of working papers. There are so many importance of that. One, evidence. Or two, decision making. Decision making. Decision making, this is for management, is it?
Risk assessment.
Risk assessment. The working papers are very important because if we're talking about working papers, that's where the conclusion is after scrutinizing the financial statement, is it? Yes. So external, like the banks, want to see the financial statement for you to be given a loan, is it? Bank loans. Government, is it? Hey, government is, that's where it determines that tax is being paid, is it? If you audit, you ask them, do you pay tax? If they don't pay tax, it means you are supposed to start saying you have to pay tax, is it? Hey, shareholders know their stand. No, they stand. For the performance. There's so many. And even employees know that that is a company where you can be employed. If it's a company that is not good, maybe their ethics is not good, can somebody be encouraged to go and be employed there even if they advertise?
No.
You say, why should I go there? I understand if employees go there, they close their doors and they stay there the whole day, no fresh air, no eating. Those are some of the things people look into to say, according to the audit, it seems as if they are not doing well. So why should I go there and work in that company? So work papers are so important. Us, as the auditors, we are supposed to do the right work, because what we do is what makes these other people go ahead with their work. So it is very, very important, and it's part of our record, because if we talk about them, it means that is indeed important. So work papers is also an evidence, as you have already said. There are documents which record all, working papers, that is, they are the meaning. There are documentations which record all audit evidence obtained during financial statement, auditing internal management, auditing information system, auditing, and investigations as well. So working papers are used to support the audit work done in order to provide the assurance that the audit was performed in accordance with the relevant audit standards. So working papers are very, very important. It's an assurance for the organization that it is going this way. So working papers as a property. Working papers are a property of the auditor. In order to keep a professional ethic, it cannot discover to third party without consent of the client unless limited specified situations mentioned. So you as an auditor, you are supposed to keep these documents as working papers very well, so that you can really have a professional that this is what you did as an auditor. So working papers covering each audit area contains and includes the following. 1, a lead schedule including details of figures to be included in the accounts. A lead schedule including details of figures to be included in the accounts. Problems encountered and conclusions drawn. Problems encountered and conclusions drawn by the auditor. Even the audit programs should be included in the working papers. The risk assessments also included in working papers. Sampling plans also included in the working papers. Analytical reviews should also be included in the working papers. Details of substantive tests and tests of control should also be included in working papers.